What is up, traders, and welcome back to Explain the Charts. Today, November 25th, 2025, we are diving deep into Alphabet, ticker Google, which has been on an absolute tear. The headlines are buzzing, and for good reason. Google's new Gemini 3 AI model is reportedly outperforming competitors, causing a massive surge in investor confidence. We saw the stock jump nearly 6% yesterday, breaking through the $300 psychological barrier for the first time and hitting an intraday high of $317.75, which is also a new 52-week high. Adding fuel to the fire are reports that Meta is considering using Google's custom AI chips in its data centers, positioning Google as a serious competitor to NVIDIA in the AI hardware space. We even have news of Warren Buffett's Berkshire Hathaway disclosing a new $4.3 billion stake, which certainly adds a layer of validation for many investors. Now, let's see how this incredible fundamental news is reflected in the charts. Looking at the daily chart, the long-term trend is undeniably bullish. We can see a clear uptrend established from the lows back in April around $140. The price has more than doubled since then, which is a phenomenal run. Notice the major dip we had in late October, where the price pulled back to the $260s. That level acted as strong support before this most recent explosive leg up. The volume on yesterday's breakout candle is massive, clocking in at over 85 million shares traded. This confirms strong conviction behind the move. This recent surge, starting around mid-November from the $270s, is almost vertical, which can sometimes be a sign of a blow-off top, but given the powerful news, it could also be the start of a new parabolic phase. Let's zoom in on the action since mid-October. You can see the consolidation period in the $240 to $255 range, followed by a sharp run-up. The key event here is the massive gap up yesterday, from a close of around $299.66 to an open of $311.13. This is a breakaway gap, a very bullish signal, especially on such high volume. The price is now in what we call price discovery mode, since it's at all-time highs. This means there's no overhead resistance from previous price action. Psychological levels like $320, $325, and $350 will now act as potential targets and minor resistance points. Now let's switch to the 1-hour chart to get a better look at the short-term structure. Here we can see the sheer power of yesterday's move in more detail. The buying pressure was relentless throughout the entire session. The previous resistance around $295 to $300 has now become a major support zone. A key short-term level to watch for support is the low of yesterday's trading day, around $309.59. If the price were to pull back, we would want to see that level hold to maintain the immediate bullish momentum. Another important support area is the top of that breakaway gap, around $299 to $300. A move back into the gap would be a sign of weakness, though not necessarily a complete trend reversal. Drilling down to the 15-minute chart, we can analyze yesterday's intraday price action. We see the huge gap up at the open, followed by a small pullback and then a steady grind higher for the rest of the day. This shows that buyers were in control from the very beginning and were happy to buy at these elevated levels. The volume was heaviest in the first hour, which is typical, but remained strong throughout, indicating institutional participation. For day traders, watching for consolidation patterns like bull flags or pennants on this time frame will be key. A break above the current high of $319.48 would signal continuation. Conversely, a break below the intraday support around $315 could lead to a test of the $310 level. So, let's step back to the daily chart and talk about the overall outlook. The bullish case is incredibly strong right now. We have a major fundamental catalyst in the AI narrative, confirmation from high volume, and a clear technical breakout into new all-time highs. Bullish traders will be looking for any shallow pullback or consolidation as a buying opportunity. Their short-term target might be the $325 to $330 area, with longer-term targets potentially reaching $350 if momentum continues. Now, for the bearish case, what would need to happen? A reversal here would require a significant shift in sentiment. The first major warning sign would be a close back below yesterday's low of $309.59. A more serious bearish signal would be if the price fills that large gap and closes below the $300 level. This could indicate that the breakout was a bull trap or a short-term exhaustion move. However, given the current context, this seems like the less likely scenario in the immediate short term. Traders looking to short would need to see a clear sign of distribution or a major reversal pattern form first. Alright, let's quickly recap the key levels to watch. The immediate resistance is the new all-time high at $319.48. Above that, we are looking at psychological levels like $325 and $350 as potential targets. For support, the first key area is the intraday low from yesterday, around $309.59. Below that, the most critical support zone is the top of the gap, right around the $299 to $300 mark. As long as we hold above $300, the short to medium-term outlook remains overwhelmingly bullish. I'd place a 75% probability on the price continuing to trend higher or consolidate above $310 in the coming days, fueled by the positive AI news. A pullback to test the breakout area around $310 is possible and would be healthy, but a drop below $300 seems unlikely right now, maybe a 25% chance in the short term, unless we get some unexpected negative news. The likelihood of a continued uptrend increases if we see consecutive daily closes above $320. Keep an eye on news related to the Gemini AI model adoption and any further developments in their AI chip business, as this will continue to be the primary driver. That's our analysis of Google. What are your thoughts? Let me know in the comments below. And remember to like and subscribe to explain the charts for more in-depth analysis. Finally, a quick disclaimer. This video is for informational and educational purposes only and should not be considered financial advice. You should always conduct your own research and due diligence before making any investment decisions. Thanks for watching and happy trading.